Greetings, Dr. Jeffrey Scott here. This is my weekend market update for July 16th, 2023. Doing this in my mountain home in New Mexico, so the audio will never be as good as when I'm back home. And my lovely little granddaughter gave me a cold, so I've got a sinus cold. So if I sound weird, I apologize. It feels worse than it sounds. I titled this Market Rotation or Something Worse. My email address, as you can see, is hgsidoc@gmail.com. I welcome comments, even negative ones if they're constructive. Um, if you have questions about the tools that I use, other platforms, always feel free to email me and I will respond in kind. As always, this is for educational purposes only. Any recommendations I make are in the spirit of education and should not be considered investment advice. I'm a doctor, not a broker. I am independent. By being independent, even though I may do programs for um, Become a Better Trader slash Wealth Charts, Wealth 365, and others, I'm an independent. I don't work for anybody else. And for those who know me, I'm actually a physician and I have a healthcare technology company. And I do this and speaking, doing these videos and helping people because give back as people did it to me. And trading involves risk. You're only solely responsible for any investment decisions you make. So if you like this video, but you go, God, it's way too long, on most Mondays through Fridays, I'll do a 5 to 8 minute video on stocksanddocs.com that is affiliated with becomeabettertrader.com. And they will get your information. If you fill this out, I post or I email them my video. They post it and they send out links to the people who have registered. Don't have to register to watch them. I work really hard to make these videos and I hope you find them to be useful. Major markets tell the story. I always like to look top down. So consistent with that, you could see over 5 days, you see a ton of green here. Look at ARC Innovation. I gave it its own green, up 11%. That was rotation into small cap growth. Now, this is even with 2% down on Friday. You'll notice that on the major indices, which are highlighted in yellow, 2.4 on the spiders, 3.3 on the NASDAQ, 2.3 on the Dow, 3.5 on the NASDAQ Qs, 2.4 on the NYSE, and the 3.7 on the Russell. That is a powerful week in the market. We'll talk about what happened as we go looking. Friday, not so good. Not horrible, unless your Bitcoin 7.6% down. Wowzer. If we look over here, and this is what I find most remarkable, because people still talk about the bear market and whether this is a bear market rally. I guess anything is possible. I've started switching my tune a while back, and what made me switch my tune is look at the performance off the October 13th lows. Q's up 49%, NASDAQ 39.80, Spiders up 29, Diamonds 20.4. Technically, all those are now in a bull market. NYSE's up 20.8. And the laggard, if we want to call it, is the IWM, which is up almost 18%. You can't be just binary, bullish or bearish. You have to have graduations, in my opinion, or else you could have been out of this market to this date. We can see on the sectors, every sector was up over the 5 days, not so much on the 1 day. Now, not to confuse you, but I'm going to look at some Q edge tools, and their sectors will look a little differently because the S&P sectors are based upon, as you can see, the S&P 500, and the Q tools are broader, which I actually like that, and are based more upon the S&P 1500 sectors. Here is the Q tools. There's a few things to point out. Weekday on Friday, 91% of sectors down, 78% of industries down, 70% of stocks down. If we look at the buckets, the percent of stocks above their midline and their Bollinger Bands eased from 84 to 79. And if we look down here, you could see that if we go back on Thursday, we had a lot more stocks above their Bollinger Bands in the S&P 1500. Now, as bad as Friday felt, it wasn't that bad, was it? Look at the 5-day move. All sectors up, 11%, and 89% of industries up, 82% of stocks up. And we've been strong for 10 days. We've been strong for a month. So question will be, was Friday just a blip or and some rotation, and are we going to continue to be doing well, go at least going into the Fed meeting, which is another week away, or is something more sinister? And then just to prove the point, this is the red would be Friday with healthcare. The only thing that was up, even at healthcare in the S&P 1500 was the only thing that was up. And you could see over Thursday and Friday was healthcare, staples, and real estate. And what do we call those? We call those defensive. So that could be a sign of something going on. Sectors, you could see all the sectors are up over 5 days, 10 days, and a month. We've really been in a strong market. I've started exposing you to this over the last several weeks. I'll do it when it seems necessary, meaning when I have something to show you. We've had a series of these blue lines here. This is a composite total breadth, including, as you can see here, all the stocks of the NASDAQ, NYSE, Russell 2000, S&P 500, NASDAQ, and Dow Jones. When I get a significant move up or down, I'll get a dot for the specific instrument. Up here, it counts up how many dots. But what I want to show you is a couple things. This red color here tells me I had a phoenix on Friday. The phoenix is a signal that would make me think that the markets might be changing, and I'll put that as a potential dagger to the downside, and we've had two of them in the most recent period of time. Other thing I want to show you are the blue lines, which are Bangos, which are signs of exuberance and often lead to some kind of a market top. Let me go back. All right, so that's some of the evidence that says be a little bit more concerned. Now, weekly market timing, you see green arrows. This is my simple model that I've been using for quite some time, looking at price above a 30-period WMA and the presence or absence of a weekly bongo. Green, I need both to be a buy signal. Everybody's in a buy. And if you look at the weekly charts, the spiders, the Qs look extremely healthy. And frankly, the Russell and the diamonds don't look bad at all. So as much as Friday, this is for the bulls, as much as Friday may have hurt a little bit, when I look at what we're seeing here on the major indices on a weekly, they still look very good. Are easing rates telling us something? We got a Fed meeting coming up and a report a week from Wednesday. So notice the 10-year turned down this week, and so did the 30. If we're really going to raise more rates, don't you think they'd go higher? Some people, and I'm not against the idea, think that the rates have already peaked. But we still have a ways to go if we went back higher. So I thought that was interesting to see. Is there a recession in our near future? So I've been kind of thinking there is. But what I don't know is when. And if you look at the top two charts, if we wait long enough, the gray bars are recessions. We get recessions. So if anybody on TV says, I guarantee you we have a recession coming, they're right. But ask them when. Now we've got the yield curve inversion, whether we're looking at the 10-2 or the 10-3. So that tells us, yeah, we better be concerned we're going to have a recession. The Philadelphia Fed diffusion index, whenever it gets below minus 20, we've had a recession. Now we got below minus 20, but we're above it now, so I'm not sure if that tells me we're out of the clear. This here, high yield index options adjusted spread, I'd expect it to raise up if market credit becomes tight. It's not tight. Rates are higher, but you can still get loans. And then something that I like to do in wealth charts are ratio charts. And this is a ratio chart to the TLT to the spider. And I just want to show you that you get spikes during recessions. Back here at the dot-com, 2009, 2020, and there's nothing suggesting a spike on this chart. So this is something that I'm going to continue to watch. and see if it shows me anything to be concerned about. Breadth improved. Of course, we had a massive week. So stocks above the 200 up, stocks above the 40 up, and the 12-week new high, new low is still in okay range. So no signals there. Buckets, this is buckets after Thursday. And notice in EdgeRater, I had over 20% of the stocks above their Bollinger Bands, another 20% at the top. So 40% are getting extended. You know what happens? They revert to the mean, and this was Friday. So we gave up some of that exuberance and some of that extension. So that might be healthy, especially when we did it when the markets were, even though they were down, they were relatively tame. Would not expect a Hindenburg omen here. We get these things occasionally after some of these NASDAQ runs, but we haven't had anything in the last 2 weeks. Not any new lows on the, or minimal new lows on the NASDAQ and the NYSE, and that's what I'm really paying attention to. Lots of new highs. 10% new highs on the NYSE probably was a little exuberant, and 8% on the NASDAQ. So no surprise the markets pull back a little bit. So if we look at the week as a whole and we look at ERG is combining earnings per share rank, relative strength rank, and group rank, and then looking at percent return based upon where your ERG fell. Everything was positive. Great week. Some areas were really positive. And if you look at return versus earnings rank, you could see it here. Relative strength rank, it turns out earnings were good and relative strength didn't matter. Some of the best performing were stocks with poor relative strength. Now, over here, and just so you know what you're looking at, if you look at the first line, I'm not saying I was up 9.54% last week. I'm saying that if I took a basket of my long stocks and I looked at the performance from the Friday previous close to the Friday close of this week and bought $500 of every instrument, that would have been the performance of that basket. So the most important thing here is the basket is really, there's hardly any things that went down. And the stocks that had big volume on Friday the prior week were down, and some of these small cap shadow stocks were down. But for the most part, everything was positive. Even if you look at something like the IBD 50, which has really been not a great performer of late, was up 4.32, which probably doesn't surprise me considering what ARK did. So again, I could have done better than that. I could have done worse than that. I'm not telling you what I did because I do options which are leveraged. But let's just say that the proof here, the point here, not the proof, the point here is that the market was strong. Know your news and earnings. There's plenty of news, but besides the jobless claims and maybe the leading economic indicators, I don't see a whole lot of things that are going to surprise the market and make the market go crazy. But I do next Wednesday on the 26th, and that's the FOMC decision and Powell conference. What will be an issue this week is earnings Lollapalooza, I like to call it. We've got 3 or 4 big weeks of earnings, starting with some banks in the beginning of the week, and I think it'd be interesting to hear how they're doing. Netflix, what's their revenue doing with their changes in the sharing, and a whole host of others. And as I said many, many years ago, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So thoughts. We saw some significant rotation this week. Started with appearance of rotation, perhaps out of large cap growth with a big rally in ARKK. Then we got the soft CPI, PPI, which lowered rates, which turned back on big cap tech. Low VIX, falling rates, weak dollar, all propelled the market higher. Friday, there was also some China weakness. Maybe it was that Bitcoin weakness that impacted the markets, but could have been just some regular old profit taking. Now, what's next? Have a light news week, minimal Fed speak, Fed's in quiet period before the next meeting. Quarterly earnings are back in big numbers this week, so likely will influence the markets, especially the banks. I also think a lot of the pros are probably still out the Hamptons, at least for a little while longer, because we're in the midst of the summer. So who wants to be in Wall Street? But with computer trading, I could trade on a mountaintop in Santa Fe, so they can do it in the Hamptons. For the bulls, the only major index not in a bull market is the IWM, and it's very close. The next sentence is important, and what everybody says, it's going to end, it's going to end, it's going to end. Markets in motion tend to stay in motion much longer than anybody expects, so we could still see strength persist. And for the bears, we had a Phoenix, multiple recent Bangos, and yes, leading stocks are very extended. And I have one scan and trade station, and lots of negative divergences, but negative divergences can go on a long time before the instrument turns. So I'm still expecting some more rotation, and would a small pullback 3, 4, 5, 6% shock me here or hurt me? No. I still think we go higher. So I'm not fully invested. I don't have any margin on, but I have quite a few positions. And before I go into the charts, I want to thank everybody who joined me at Wealth 365. It's kind of backwards. Typically, I do an education session early in the week, and then at the end of the week, I do a quote selling session. I had to move the education to Friday, and I did the selling on Thursday, which is backwards. But I will be doing a live trading session on July 22nd for all marketplace owners. So the marketplace of my program, it will be, I expecting 8 to 11 Central Mountain Time, so that would be 10 to 1 o'clock. It will be recorded. The benefit of coming is you can ask questions. If you're somebody who's trying out my tools and other platforms and have questions and want to know when your sessions are, well, we've not activated any websites or anything. People just have some trials, but I'm going to do something more broad-based in the next couple of weeks, and I'll announce it through this video forum and to the people that are on trials. Remember, daily updates at stocksanddocs.com, and you can always email me if you have questions about what I'm talking about with my tools. So it's time for my favorite, which is the charts. So I opened up this page intentionally. And the reason why I opened this page is we're in a, everybody says buy in May or sell in May and go away. We've got some strong seasonality upon us. So for example, AMD is up 8 out of the, if you look at from July 18th, which is the weekly date for, I don't understand why it goes from Tuesday to Tuesday, but that's the weekly date in the program to the end of August. So it's 6 weeks or so. 8 out of 10 wins, average gain 24.7, loss 7.09. So the average return in this period of time on AMD is 18.41. If we look at NVIDIA, and this is the projected earnings, the Keith Wade's indicators, but it says right here 9 out of 10, average return 10%. So be careful of being too bearish here. We get summer rallies. It may have started last week. So let's go into the daily indices, and let's just take a look. I haven't looked at this yet, the 5-minute chart. Okay. So on Friday, again, was this a horrible day? Absolutely not. Gapped up at the open, clear shooting star reversal candle at 10:15 Eastern time, or is it? Hold on. Yep, I want to make sure it didn't switch to Mountain Time. And then the market sold off the rest of the day, closing down. But was it a horrible day? No. I think clearly there was profit taking, and we'll see if there's anything more sinister. If we look at the daily S&P, you could see opened higher, closed lower, down very little, less than 0.1%. That would count as a red candle high, which can be a single candle reversal. So did this guy, and the market kept going. So did this guy, and the market kept going. Here's one that was a red candle high, and the market sold off. So it's nothing guaranteed. So is this in trouble? No. Is it guaranteed to go higher? No, but I think a little pullback is probably in the cards, and I'm not sure that's a big problem. The Qs, shooting star, that's a reversal candle, down 0.02, so really did nothing on the day. Um, do I think the Qs are going back to retest their October lows? No. You got a rising 50 here that's still far away. I don't think it's even going to get down to that point. But I think you've got a little congestion area in here. Could you come back a couple percent? Yes. The diamonds, are a little different. I put this Darvis box on this. Curious if we could break higher, and we haven't broken higher yet. So I think the diamonds and it was the Qs, the Russell in the same position. So I'm going to be watching the diamonds to see if they can break out. Right now, they're this is a big range, but I'm more concerned with can they get above that. If I look at the Russell, we were watching to see whether it could take out the anchored VWAP from the 2022 highs, and it did. That's awesome. Now, is this the retest that I was going to hope for? And does it go higher? Maybe. Does it come back and bounce around this for a while? That would be fine. It would not mean your portfolios are getting destroyed if you're long, and it wouldn't mean the market's almost that the rally's over. The VIX Friday, despite a weekday in the market, was down another 2%. And if I look at the VIX weekly, you could see on the weekly VIX, it's down 10%. So how low can the VIX go? And remember the words of George Lee, may he rest in peace. When the VIX is low, look out below. When the VIX is high, it's time to buy. I think it really has to be when the VIX starts to go higher that we get nervous, and we'll see. You could see sort of a massive sell-off. You had a shooting star on the 6th at the 200-day moving average. How you can't make that stuff up right at where you'd expect it to stall, and then the dollar has dropped like like you're on the 21st floor of your condo, and somebody cut the uh, the ropes holding the elevator, or they're not ropes, the steel ropes, and the elevator flew all the way down and crashed. But wow, look at that dollar drop. If we go and look at commodities, you'd expect strength with the dollar weakening, and you'll get it. Now, gold, if you're bullish on gold, I'd probably be excited because you had a big move, but I'm not sure I'd enter a new position unless I can take out that 50. Silver did take out the 50 and right now is stronger than gold and had a up on Friday a little bit where gold was down. Oil had a nice little run on the dollar weakness, and perhaps now we're paying attention to the tightening or the reduced output by OPEC, but it gave some up. And then our good old buddy, the Widowmaker, natural gas continues to do nothing. 10 years peaked, come down nicely. Inside day on Friday, which may or may not mean something. After this big of a drop, it was due for a bounce. We'll see if it doesn't keep coming down. Market signals we've already looked at. And again, just commenting that the weekly candles look very good on the major indices. Breadth, I talked a little bit at the meeting about why I have this on my chart, which is the TLT spider ratio chart. And the reason why I do is simple, because during periods of recession, as we saw in 2020, this will peak. And so I'm looking to see any evidence that we have a problem here, and we don't. So right now, I have nothing that says a recession is lurking tomorrow. The next two are looking at the cap-weighted spiders and Qs down the lower right-hand corner versus the equal-weighted if it was up to the left-hand corner. And we could see the cap-weighted continues to dominate. This is looking at the Qs up here versus the IWM, and we could see that's happening. Here's the IBD 50 versus the FANGs. You could see what's happening there. 50 lagging. S&P 500 sectors daily. I like to look at this. Actually, it's hourly, not daily. Sorry. It does say hourly there. I like to look at this intra-market when I have a chance just to get a sense of what's going on. So what you see here, each of the S&P sectors with the ratio chart versus the SPY, that sort of knocks out the relative amounts that each of these sectors might be for a number. I'm looking for what's pointing to the upper right hand corner. Those would be the strongest. So communications, technology, and discretionary have been leading. What's pointing to the lower right hand corner? Well, right now, healthcare, although it bounced a little bit Friday, utilities, and staples. The fact that those three showed a little bounce on Friday is concerning if you're bullish because it is, those are, what's the word I'm looking for? They're defensive. Other things of note, we saw some recent movement in materials. Eh, Energy tried and it's come down. Financials tried and it's come down. Industrials tried, it's still in the middle. So I'm not giving up on industrials yet. And then I go into my bull scanners. And when I look at my bull scanners, um, a number of things I'm going to look at. So first I like to look at the heat map for the S&P 500. So that gives you a sense of how the market did on Friday. Wouldn't it be nice? So I'm not. So if you're a wealth charts user, Rob's always saying if there's features you want, email customer support and ask for them. Wouldn't it be nice to see a weekly heat map? Because the weekly heat map is going to be all green. Wealth Scanner, I love this tool. It's sort of doing a relative strength of, and I'm using ETFs of industry groups and sectors. It gives me a sense of what's working. So a couple of comments. I still got three things at 800 and above. Real estate, which surprised me, communications, and social media. So Meta is really making a difference there. Um, then I've got a bunch of the 780 to 790. A week ago, the number was a little bit better. So there has been some easing, but that's still very, very strong. Now, you could stick anything you want in here. So since we looked at seasonality in the NASDAQ 100, so let's put the NASDAQ 100 and see if anything up here is moving. Now, one of the challenges with a lot of these things is they may not be at a buy point. So how could I figure out which of the NASDAQ 100s might be at a buy point? I'll go into my CAT scanner and I'm going to look for the NASDAQ 100 just as an example and see if any of them are going to show up with dots. So all of these are pullbacks in an uptrend and they had a couple of dots. And this is one that I liked, Copart. So Copart, beautiful uptrend. If you watched my presentations, you know I look for these pullbacks, give me a better entry position, and then a breakout. And this is a leader running right up at 17-day. You could see two dots. One of these is breakout, one's momentum. You can see relative strength in OBV, and although we didn't trigger a volume signal, volume was pretty good anyways. So I could do top down by looking there. Maybe I want to look at communications. Is anything in communications giving me my favorite signal? So Spotify, not a stock that I typically buy, and Spotify, so you might be wondering why does it say two dots? Because technically it gapped up on and it had volume and it had a big enough gap to be a viable gap up. But in the chart, I suppress the dot if it closes in the lower half. So Spotify, nice uptrend. I don't like the reversal candle. Make my trip. I can guess what they do. Probably a Chinese travel agency. I mean, it doesn't do anything for me. Real estate. Real estate's a lot of different things. Some of the healthcare REITs actually looked interesting of late. So I could see if anything here, TPG, I'd like to see a break above the 200. This one pays a nice dividend. But what I like to do is I like to build a list of high quality stocks. I call that my combo list. And the combo list is typically 600 to 1,000 stocks depending on the week. And they come from a number of different places. And it's where I like to fish from. So let me find it here. And I'll have the code in the YouTube remark session that if you're a wealth charts user, all you have to do is import it. So combo leader list. 3 stocks come up to the top with 4 dots, then several with 3. So I'm just going to quickly show you my 4 scans, and if anything comes up and looks interesting, then maybe I'll look at my buy watch. ACAD Pharmaceuticals. This is a news story. I don't know what it is, so raised to 33, raised to 33, raised to 27, raised to 30. So obviously they had some news come out in here. I do my research, but if they're raising it to 33, it's already had its move. So I'd go and see what happened there. Notice massive volume. So here's a uptrend. Clearly look at the weekly for an uptrend. The weekly Bangos green. You can see the pullback into the 1750 area, and then a massive breakout with volume, 4 dots, relative strength, and OBV. I'd have to make sure it hasn't run too far. And for those that have my marketplace indicator, my stretch mathematical extension is at 100%. This thing's extended, but it's what drove it that matters. GKOS is another healthcare stock. This is at a really big power move. And again, I'd probably say a similar story. Do your research. It's gone from 50 to 80 since May. What a beautiful chart. What bear market? 4 dots, massive volume, relative strength, OBV, upgrade to 75. So here's the problem. They get upgrades, and here's one to 85, and they run up to the price right away. So when you think about buying a technology stock, you're worrying about the market, you're worrying about earnings, and you're worried about being blindsided by some news event like a secondary. The benefit of big cap techs, they don't usually have major moves for any of those, even with an earnings plus or minus. When you think of a biotech, you're worrying about earnings dates. You're worrying about news. And that news is the problem. Because on biotechs, they can come out with data anytime they want because there's meetings throughout the year. Like in cancer, the meeting's the first week of June, and there's a lot of volatility in drug companies that make cancer drugs. So a lot of people don't like biotech. I love biotech because of the moves. But the moves can be up, the moves can be down. A negative trial could wipe out 80% of your holding. And then something like a GKOS or ACAD have a tendency to do, and I'm not saying I have any insight into these 2 stocks or warning you, but just look at Axosome as an example. These stocks have a tendency to do secondaries. And why not? If you're the CEO of Glaukos and your stock was $48 for quite some time, and now you could sell shares in the market for $80 and pay off debt, why wouldn't you do that? So I'm not saying it's coming, but that's what happens with these guys. Looks great. I'd have to do more research. United, where multiple payers were saying that the market, that their earnings are going to be down, their revenues down, their costs are up. United came out with great numbers. So you had 1 day benefit from the great numbers. You could see they beat by 13 cents, which is only a 2.16. But I think the bigger story is not how much they beat by, but the fact that they beat when everybody else that had reported thus far had said bad news, bad news, bad news. Now, I don't love stocks that are below the 200. I do like this company long term. It's one to keep your eye on. AXNX. Don't know this. I wonder if this isn't some type of robotics company. I don't like the candle. That's enough for me to say I would move forward. CME started looking interesting. And again, what's my pattern? Uptrend? Well, it's hard to see because it's been in a short-term downtrend. But if we look on the weekly chart going back to October, it's in an uptrend. It's pulled into support. Now, the beauty of this stock here is you got tons of support right underneath it. You had 3 dots come in: volume, breakout, momentum, relative strength peaking up, OBV turning up. Your high jumps at 44%. You're not extended. I think CME is maybe the most actionable Now, keep in mind that it's looked like this before and it's been chopping around, but it's something to keep an eye on. Elanco Animal Health. This is a stock that has been beaten down. I don't need to prove anymore. It's been beaten down. But it looks great in the short term. It broke out here. Look at the squeeze, volume, gap up, breakout. Volume, the breakout was a couple days earlier, my bad. Volume, gap up, momentum, relative strength, OBV. I like this one. Now, this is not a leader, and it doesn't really even qualify for a pullback in an uptrend, although I guess it probably does if you look at this recent pullback here after that uptrend. But Elanco. So notice I'm going down a simple list, and they all have my requirements. Here's FRG. What is my requirement? Uptrend, pullback, breakout. I want relative strength and OBV to heading up. I don't want to be at 100% on the high low. And here I have volume, breakout, momentum. When you see a green dot on the squeeze line, that means I just released within 3 days from being in a squeeze. So do your homework. Just don't buy them because they look good. Option Care. Um, I really like the CEO in this company. I worked with him at Cardinal Health for a while. I actually saw him this past week at a McKinsey healthcare conference. But here's a stock going sideways that three dots, volume, breakout, momentum, relative strength and OBV, and you're buying it in a scenario that you've got lots of support and easy place to pick your stops. Notice all of these stocks to be here had to have the weekly bongo, which is the one in the middle here, which is green. And if you don't have my marketplace, then you can look over at a weekly chart and see it's green. And the daily had to revert to red because of a pullback. I'll go down a couple more. AO Smith. This one's already breaking out and running. So I look down here at 59%. It's not extended. So here's just another little flag and a breakout. Activision. This is all about whether the governments across the world let them be taken over by Microsoft. And you got, at this point, it's an arbitrage play and a news play, so I don't get involved. And Cigna reacted very well to United's earnings as well. I don't remember if their earnings are out yet. I don't think so. Maintained buy at 355, so that's still 20% away, more than 20% away. And then there's Copart, and we'll just finish here with John Deere. I don't see oomph here, but a breakout above this level would be interesting. So that's my pullback and uptrend scan. Now, one of them, um, Elan, really to me is my bottom popper. Stocks that have sold off that may not have a weekly bongo green because they've been selling off, but they just turned green on the daily and they've got some momentum. So Elevance Health is one of these, and it's a healthcare provider, insurance company like United. Um, Again, too much of a downtrend with too much resistance above it. Evolent Health, again, got to get above the 50 and 200. But I do like this guy. Norvo Novodisc is giving you a chance to enter. This is one of the two companies with drugs on the market for diabetes with the massive weight loss. I lost 50 pounds on the Lilly one with doing nothing except a shot. Um, it's an 85 billion untapped market, and the insurance companies are nervous as heck. I think that a break above the 50 on Norvo Novodisc would be interesting. It's not there yet. It might be there on Monday. So notice how these are a different pattern. These have all sold off and the weekly bongo is still red. How about rockets? Oh, I want the leader. I want the best stock in the market. Well, these are tough because they're extended. So we already looked at ACAD. Yeah, it's extended. High jump 100%. How about AEHR? Talked about this one on Thursday and Friday. This one had a great day on Friday, a big gap up. Now, is that a new run that's coming? Is it going to go much higher? The high jump's at 99.47. And when the high jump gets this high, typically markets don't love that. So I have to be careful. But boy, what a beautiful looking chart. AEHR. We looked at GKOS. Elon is here because even though It sold off. It's had a big move. It's almost a double. FRG. Let's see if anything else here came up on my weekend review. Nope. All right. The next group and the final group I look at is called Momos. These stocks have momentum. The only thing I cared about was they had dots. So one that's new to us here would be LUNR, Intuitive Machines. That is a junkie chart if I ever saw one. It's below the 200. And why is it here? Because it had three dots. It draws my eyes to them. So, SEL on this list, I think CELH is one that is interesting to me. It's one of these energy drink companies that has a lot of buzz. Nice run up, sideways move, and frankly, it looks like it's ready to go. It hasn't gone yet. I suspect the daily bongo will be close to flipping looking at the pattern. Volume, breakout momentum, relative strength, and OBV. This is another one. So that's how I do my analysis, folks. I start with the market. The market says still look at longs. I look at what industry groups are looking at, and I'll look deeper than I did today at some of the industry groups that are leading. And then I'll look at a list of high quality stocks and see if any of them are giving me actionable signals. Um, I had a pretty good buy watch list, big buy watch list. So let me tell you what goes on the buy watch list. ACAD probably doesn't go on the buy watch list because it's extended. Um, but let's just see what I put. So we'll start with which buy watch list stocks have signals. AEHR, United, Celsius, Elon. This is IMGN is another biotech play. I can't believe, or let me just say this differently. I have no insight with this company. I have not talked with any leaders in probably over a year, and so I have no inside information. Saying that, I can't believe this company has not been taken over yet. Um, this company has a great product. The market, I think, underappreciates the potential. It's a perfect takeover candidate, and it's given you a buy opportunity. Volume, breakout momentum, relative strength, and OBV look good. This is when they had some data before ASCO. I think this guy is interesting. There's Workaday, interesting TV commercials at the minimum. Pull back here. Um, I'd like to see it get some momentum. I'd like to see the relative strength pick up, but it's setting up. Abercrombie and Fitch, this one and a couple of the other teeny bopper stocks, the teens apparel, pull back hard, but that's a reversal candle. It's a green candle low, meaning the lowest low going back at least 10 bars and a closed higher, get a green candle. Here's a red candle high, highest high, and then a closed lower with a red candle. You get a red candle dot there. So not yet, but this is my watch list. So I'm going to just go to the watch list and not look at who has signals. And you could see, that's the big one. It's not my watch list. Let me see if there's anything else that I wanted to show you on my watch list. Is Salesforce getting ready to go? Well, it popped. What a beautiful signal here. Don't like what it did on Friday, so I'm probably not chasing. But if I get a pullback, I might want to be watching that. GFL, it's a environmental stock. And the reason why I put this one here is no, Kathy, don't go buy it on Monday, but it's pulled back into free parking. And a lot of great stocks in their uptrends keep coming back to their 50-day moving average. Well, we just came back to the 50-day moving average and had a nice move off of it on Friday. It's a low risk buy point, but it's got to be moving up, so I'd wait and see. Google, pick which one you like, really looks like a good buy point here as well, breaking out, but Google has earnings this week. Hello, which we used to call Momo, it's still got the ticket Momo, is one that I've been watching in a little bit, and this one's starting to run. It's a Chinese gaming stock. And anything else that I really wanted to show you that here's another one of the teeny close, Urban Outfitters. And again, pull back this week, but that's a reversal candle, Not ready to buy it yet, but looking for it to turn and go higher. Not much on the short side. Just show you something. I'm now stepping out of wealth charts for a second. If you're not, don't want to see it, close your eyes. Couple things. This is in TradeStation. I have a lot of different signals in here. Not all of them are available inside wealth charts. I want to get the market breadth, and I talked to Rob about that. We'll see if we can't do that. Um, this is the high jump on the NASDAQ, and we are at the highest area. And what I wanted to show you is when you get to this point, typically the markets pull back. Now up here, despite it being at this point, you had little pullbacks, the market kept going higher. So nothing's black and white, but we are at a point now. This is the Bangos, which just tells me we have a little bit of risk in the market. You could see that your percent B is at an area that you expect a reversal, as is your RSI. So there's a lot of potential risk in this market. And the other thing I wanted to show you, and again, negative divergences can get a whole lot worse. So I have a list here of daily indexes, daily ETFs, weekly indexes, then my longs and my shorts. Notice TGTX, which really got sold off hard, actually has a bullish RSI divergence, which who cares? As I said, divergence go on a lot longer. But look at all the red on the daily ETFs. On the Qs, the spiders have CCI and RSI divergence. If you look at the weeklies, they have the divergence. Let me make sure. I got to change that to weekly. My bad. See how fast that will do that. Time frame. Weekly. It may take a few seconds for that to change. But that divergences are something that I was a little bit surprised about and didn't expect to see. And so there we go. And so I'm going to be watching that. So that's another one of those concerns. The Bangos, the Phoenix, the divergences, the fact that we got so many extended stocks are the things that tell me we might get a little bit of a pullback. So just to finish here, thank you so much for taking the journey with me today. If you're new to this, subscribe, hit the alarm. You'll get notified when I post these. Check out stocksanddocs.com if you don't want to be put to sleep for an hour of my ranting. And have an awesome rest of the weekend and rest of the summer. And for those that own my packages, we'll see you next weekend online.